Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar once again backs away from that 78.15 level and still presents a bull trap from that region. And therefore we can see now the market is turning back towards the bottom side of the range, but there is still a lot of work to do, even though we did print a low of 77.24. A close under 76.90 would reinstate the downside to around that 75 mid-region. The RSI not quite confirming the bearish call, as previously just slipping underneath the midway point did reject. So do be aware, and we're getting very close to this 60-day moving average, which is somewhere close to around 77.20 also. But there's still a lot of work to do on the downside, and no doubt with the Fed rate decision later, well, more to the fact, Sydney 4 a.m., which is widely expected to see no change, but we could see a slightly hawkish statement due to the recent numbers that we've been seeing out of the US. Therefore, could improve the US dollar and see a weaker Australian. Saying that, the euro, which is weighted to the US dollar index at 57.6 and also measures the greenback strength against a basket of 6 major currencies, we can see that we are easing away from the top side of the range, with the resistance still seen key at 121.80.90. I anticipate that we need a little bit more to the technical approach to support a bearish case, but let's see if the US dollar can rebound from the current level around 91 and therefore looks about 91.70. This would ignite the move back towards the lower side of the range, somewhere around 119.90 to 120, and reassess from there. The dollar yen, since the break of the trend, has progressed further to the upside and getting closer to a potential bull trap as well, around 109 figure 25. I do anticipate that the recent dollar strength and the yen weakness is more on the back of the risk of Japan coming back into lockdown when it talks more to the COVID situation. Nevertheless, the break of the trend has produced some momentum, and let's see if the bulls do flee from the 109 figure 25 area. Sterling, little to report really. The market is somewhat mixed at the moment at this current level, but I do give in favour to the breakdown of the technicals, especially with the RSI looking potentially for a further slide as it pierces the 50 midway point, that we could see a slide back towards the downside. Still keeping in focus of the 136.90, 137 target. This is, as you've seen, a little bit more momentum to the upside for sterling yen, but I do anticipate from around that 151.80.90 level a bull trap, and therefore see the market reverse and look back towards that 148.40 region. At present, the market, if we close under the level of 1,770, would give further risk to the downside. Technically, we are breaking down, and I am getting more to the fact in favour of seeing a bearish case. And if so, a close under 70 could see a fall to 1,746. And if the dollar does improve on the back of the Fed, then we could see also potential slide to the gold situation. And also watching yields rise has also put a bit of pressure on the currency, more to the fact the gold currency that is. A little bit of a whipsaw play in oil, but still market a little bit hesitant, as I believe, approaching that top side where it was rejected at $64 a barrel. Any approach there should again see a bearish ambush, and I do anticipate the market to drop back towards that bottom side around $60 and reassess from there. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.